Hello traders, hello traders. Today is the 10th of February 2013 and the time in London is 24 minutes past 7 p.m. In New York, 24 minutes past 2 p.m. Happy Sunday to you all. This video is about the dynamic Fibonacci patterns. Okay, when a Fibonacci pattern is formed, okay, traders will be expecting, for instance, a Gatley pattern. Another trader may be saying that this is going to be a crab pattern, okay? And because the market is dynamic, okay, no one knows, okay, which pattern will be formed at the end of the day, okay? But as the pattern is being formed, trader will be watching the criteria for each Fibonacci pattern, okay, trying to trade in the direction of the price. The mistake that a trader will make is to impose a particular Fibonacci pattern on the market, saying that this is going to be, okay, a Gatley pattern. This is definitely, okay, a crab pattern. This is definitely a butterfly pattern. This is definitely, okay, a bat pattern. Do not get into that mode because you will make a lot of mistakes because the market stable data, the market is dynamic, changing constantly. You can see that the economy news, the fundamental can change, okay, the dynamics of the market at any point. So price may be going up. For instance, you are bullish, nicely, everybody buying. If, for instance, there is some okay, terrorist attack, okay, on Wall Street, which is no one is expecting that at all, okay, here you'll see that the price will come down, okay. Or suppose the Fed came out with some crazy news that no one is expecting that can change the course of the price. So the news, the fundamental, okay, can change the dynamics of the market, and the market is constantly dynamics. Okay, on this chart, we are on the monthly chart of Mattel, Epic MAT, okay, Mike Alpha Tango, Mattel Incorporation, American stock. We see that there was a pattern here being developed. The price was first in an up move, which I'm going to color now into green. All right, so the price went up, and then there was a profit taking down to this level. So when we see that, we will think of either we see a uptrend and a profit taking, not 100% profit taking, okay? So we will be thinking of either a bearish butterfly pattern, we may be thinking of a bearish crab pattern, we may be thinking of a bearish bat pattern, a bearish butterfly pattern, a bearish Fibonacci pattern. Because the condition for the bearish Fibonacci pattern, we have an uptrend and then a profit taking. So as it's going up, we will use our Fibonacci drawing tools, which I'm going to do now. As it starts going up from here, which means price came out of the channel, okay? We use our Fibonacci drawing tool to highlight the Fibonacci key levels. All right? You can see that there is one level here, which I will color now, let's use green again. The horizontal green line, that's 38.2% Fibonacci retracement level of this move from here to here. So this is what we call X, this point we call it A. So this is XA. So as the price was here and start changing direction, we will be thinking of which pattern? We will be thinking of a bat pattern. The bat pattern, we know the criteria, which I'm not going to discuss anymore because there's a video about the formation of the bat pattern. Some traders may be thinking of, okay, butterfly pattern because the butterfly pattern can be between 78.6%, okay, or less, okay. So trader will be saying, okay, it's going to be a bat pattern, all right, and then we use the Fibonacci drawing tool to determine the point C and blah, blah, blah. But at the end, you can see the price went like this. If I draw a line, this is about a dynamic Fibonacci pattern because the pattern is being formed. Traders are analyzing the pattern as the pattern is being formed, trying to know which pattern is taking place and trying to take advantage of it. So it is happening and the traders are looking into it to understand what is taking place. But finally, you can see that the price went to this level here. Okay? So in the first stage of this pattern that is being formed, the price went to 38.2%. Okay, let me remove my Fibonacci drawing tool and start rolling it down here. We will again use our Fibonacci drawing tool to try to see which pattern is being formed here. Okay, we can say so far that it's going to be a bad pattern, and we will set our targets for this pattern to go from here, okay, or from here, all the way to the 88.6% Fibonacci extension zone of the SA move. This is the 88, where I put my cursor now. Let me color it so you can see the difference. So the purpose of this video is to show you in a real time, when we are trading, what a trader is facing. The dynamic Fibonacci pattern being formed as it's being developed right in front of you, what adjustment you need to make, what you are looking at, how you are analyzing the market. This is about a dynamic, okay, Fibonacci patterns. All right, the pattern is not yet completed, it's been formed, and you are analyzing it as it's progressing steadily. So you are drawing line as I'm doing here, trying to figure out what is likely to take place. But as always, you will make excellent decisions if you are drawing your channels, break above, retest, turn around. You do not get into the Fibonacci gambling game, try to say it will definitely turn around here, it will go to this level. Nothing is certain in this messy market. Step by step, okay, at a low risk point. So from here, we will say it will go to, okay, 88.6% because we are thinking of a bad pattern. But look, it didn't. In fact, the price changed direction here and quickly returned back down. What has happened here? Let me remove my Fibonacci drawing tool. You will face this challenge when you are using a Fibonacci pattern, trading a Fibonacci pattern, trying to understand which pattern is likely to take place. That's why I'm posting this video now. So, in fact, all the price has done, after the up move, all right, the price gave a pullback. Okay, what he did, he moved from here, to the 61.8% level, exactly. The Fibonacci pattern, that is exactly at, after the correction, the A to B, that is exactly at 61.8, is the Gartley pattern. That's what they say. They say, in theory, they say to us, exactly. I do not use word like exactly in trading. Never, ever use that word. I never use it. I understand that word exactly, but I know that there's nothing like exactly in the market. Nothing, 0, 0. Sometimes you see here stop it exactly, but not always exactly. It's a zone. If I may break above it and quickly retrace back below it, it's never ever exactly. Remove exactly, remove certainty, remove guarantee from your mind, and you make excellent decision, and you won't get into trouble. But here, it stopped there. Good. So we will be thinking of a Gartley pattern here. But you see, when he was here, we were thinking of a bad pattern, and he displayed a bad pattern criteria here. So we were thinking that now it's going to 88, but it didn't. When you are trading, price going up, draw your resistance level and watch it. You see some traders. Look here. This candle here, you see? It came near this zone. Conservative trader take profit from one level to the next level. Simple. Simple. Don't make it too big for yourself. Green line, look. It's a resistance of, look, this level. Change direction again. That's why it changed direction. So if you were just a conservative trader, you'll take profit here. And then you just say, all right, wait for it. Come and break above, retest, give you again a buy signal. You'll take it again. Next level. You are watching the resistance on the last one here before, you see. So you'll take profit again. And just wait again. Wait that breakable retest, and you are taking it step by step. But if you are just greedy, or even you didn't bother to secure your gain, look, it changed direction here. It didn't go to 88.6. So you'll be saying, what? It's not going to 88.6%? It does not have to. Okay. So now you change the direction here, start rolling it down. Everybody say, well, it's going to be what? A Gartley pattern. The Gartley pattern, the bearish Gartley pattern, the criteria for the bearish Gartley pattern, we must have an up move first, and then a price pullback, not total retracement. Then we see price rallying, okay, up to the 61.8. Exactly, that's the theory. Okay, remember the theory and the reality of the market. Exactly at 61.8, which it did here. So from here, this is what we call X, A, B, retracing to the 61.8% Fibonacci retracement exactly. All right, Lavoisier. So now, from here to here, which is the B to C, should be between 38.2% and 88.6% Fibonacci retracement level. I can tell you now, it went down all the way to 88.6% Fibonacci retracement level, which is the blue line here, okay, of the SA. I always use the SA apart from everything else for the retracement levels, so I don't make mistake, okay? So, all right. Okay, in this session. No, my apology to traders. My apologies, traders. I'm getting tired, okay? This move from B, I know some traders already noticed what I've done. This move from B to C should be 88.6% Fibonacci retracement level of A, B. For the bearish Gartley pattern, we want to have an up move and then a correction. Price rally from A to B to the exactly 61.8% Fibonacci retracement level of the SA. Now, we want again a pullback, the B to C, should be between 38.2% and 88.6% Fibonacci retracement level of the A to B. This move from here down to this level should be between 38.2 and 88.6% of A, B. So at this point in time, we'll be saying that this is a Gartley pattern. So we have S, A, B, C. The target zone for the bearish Gartley pattern is at a 78.6% Fibonacci, okay, level, Fibonacci retracement level of the SA. Repeat, the C to D for the Gartley pattern should be in the zone of 78.6% Fibonacci retracement level of the SA, which is right here. If you look carefully here, talking about dynamic Fibonacci pattern, because the price keep moving, okay, keep moving. This Y is dynamic, so you don't want to assume anything. Price came here, traders took profit. Look, they took profit exactly here. The bearish Gartley pattern is completed. Everybody would like to sell. Everybody will be happy to sell here because the bearish Gartley pattern is completed here. Gorgeous, isn't it? So you will put money here to sell, or you will wait for a clear-cut signal to sell, yes or no. You will expect the price, in another word, you expect the price to go into a declining channel. But look, it pulled back a bit, well, to the next support level, from one level to the next level. You see, if you are trading like this, like conservative trader, you make more money consistently. You reduce your losing trade, and you make profitable trade consistently. One level, next level, watch it. Break below, retest, turn around. Next level, break below, retest, turn around. Conservative trader, you will make more money instead of being greedy. That's my personal view, all right? So you may not suit your trading style, but okay, all right? So here, price start going down for 2 months, came to the next level, trader took profit. Look, it changed direction and returned back above the Gartley, okay, the bearish Gartley pattern. It went above it. All right, if I remove some lines on this chart, you will clearly see our Gartley pattern on this chart, which I will color into red, because you will face this challenge sometime in your trading, and you will notice that the market is dynamic and no one should impose their pattern on the market, and that we should go step by step, okay, with the market without assuming, okay, anything. Never assume anything. Never do that, okay? And use the trading triangle, use, okay, the fundamental, okay, to make a consistent winning trade, okay? This is crucial, okay, in this messy market. Very important. Don't get too arrogant. It doesn't matter whether you are engineer, you are doctors, you are whatever, okay, I don't know. What kind of qualification you have, forget about that. It's trading, all right? Forget about it completely and just follow the price, okay? Whether you are millionaire or billionaire, doesn't matter. So you see now, so this is the Gartley pattern. Okay, completed here. But look, it's a bearish Gartley pattern, but the price did not go down much. In fact, the price turned around and displayed a higher low, confirming to us, as we see this higher low here, and we will wait. Now, it break above it. Game on. So we will say to our breakout traders will quickly buy here. Conservative traders will say, what's going on? Is it going to go up now? So we are saying, what's going on? We expect it to go down because we have a completion of a bearish Gartley pattern. But if you check the fundamental of a market and you check the market, something must be going on for this stock, Mattel Incorporation. So check the balance sheet, check the news, check the management, what's happening, why Mattel suddenly, why the market is happy, why the smart money prefer to sell, to buy in this zone. Something probably fundamentally has changed. We want to know. So when you see like this, okay, do your verification also. You see? So the trader will always make the right decision. So at this point in time, break above it, we say, wow, is it going up? Okay, so if you didn't take profit here, you turn around and start doing this. Okay, take profit all the time, all right? Or at least secure gain. So we will say break above. Now give us the confirmation. Yeah, it is. Give us confirmation to buy. But because we were thinking to sell first and give us a signal to buy, we are very, very careful. You see, you understand now? We are very, very careful now. And now it's going up. So now we know that our Gartley pattern is violated, so to speak, which means it's no more a bearish Gartley pattern. That's why it's dynamic Fibonacci pattern. The next pattern that we're going to think of now is which one? We will think of, okay, the crab pattern. So for the crab pattern, we will be saying that our target, okay, is here at 161% Fibonacci extension zone for the SA. Repeat, the 161% Fibonacci extension zone for the SA. So for the crab, the bearish crab pattern, we must have first an uptrend and then a profit taking, price pulling up to the zone of 61.8% or less. But for the Gartley, they say exactly at 61.8. For the crab pattern, up to 61.8 or less. So 38.2 or 50% still valid for the crab pattern. Now, for the BC, we want to pull back to be between 38.2 and 88.6% of the AB, like the other patterns. But then, the C to D, the target zone for the crab pattern, is 161% for the bearish crab pattern. It's at 161% Fibonacci extension of the SA. As you have seen in this video, at the beginning we were thinking that it's a bad pattern, but it couldn't complete the level of the bad pattern target zone. The market is dynamic, changing all the time. The news, the Fed, the ECB, okay, the Japanese government decisions, the inflation, okay, the global economy, the market sentiment, the trading triangle can change the dynamics of the market. Though we understand all these Fibonacci patterns, the market is dynamic. And the Fibonacci pattern is dynamic. One cannot impose the pattern on the market. One should go step by step. You understand? So here we were thinking that, okay, it's going to be a bad pattern, and now it couldn't reach the target zone. Okay, here we see that it's 61.8, start going down. We say now it's going to be a crab pattern. We take it from here. It reached the bearish Gartley. We will say it's going to be a Gartley pattern because it reached 61.8, exactly 61.8, and pulled back nicely 88.6% of AB. We are saying now is okay, a bearish, okay, Gartley pattern that we're going to have. Here is the target zone or the completion zone or the convergence signal point for the Gartley, okay, the bearish Gartley pattern. But look, price went down for 2 months. Now we went above it and found a support. So we're reviewing all the time our pattern. First we thought it's a bad pattern. Now we thought it's a Gartley pattern. Now we are thinking that it's going to be crap pattern. Another thing, if you look carefully on this chart, you see some traders took profit here again at 88.6%. No. Where are we? Is that correct? Let me check, double check carefully. Yes. Some traders took profit at 88.6%. All right. These are the bad pattern traders. So because now it failed here to go all the way here, so finally we say, okay, so some traders get confused because normally this is what I'm saying to you, because we shouldn't use anything as a science in the market, because for the Gartley, for the bad pattern should be, okay, up to 50% or below for the retracement of A to B. So now the price reached 88.6, some traders took profit again, look. Here, that's why the price went down. This is our 88.6% of SA. Traders took profit there again, thinking that, oh, because he couldn't finish at 78.6, he will definitely finish here. He went down again, only to retest, and now we are above it. At this point in time, as I'm doing this video, I'm saying to you, probably we will reach this target. It may not, because why? The price moving from one level to the next level. Where is the next level now? The next level, ladies and gentlemen, is here. Let's put it into pink to draw the attention of everybody. That's the next target zone. Step by step, watching it carefully, also the median line, always. All right? The news, the fundamental, and the market can change the dynamics of this stock. You may see it on Monday, it may gap down, it may gap up, and you may say, what's all this? All right? The market is dynamic, and the Fibonacci patterns are dynamic, as I demonstrate to you in this video. All right? I hope you have enjoyed this video about the dynamic Fibonacci patterns that you will put into use, okay, to make excellent trading decision. Until the next time, enjoy yourself and be very happy. We are the TSTW SYS008 traders. I speak to you soon. Thank you.